Hello and welcome to Martyn Lucas Investor. We've got a big show planned for you guys today. We've got Swift versus Ripple. We've got Swift coming out with a new blockchain, bringing on 30 different bank partners. Is it a risk to Ripple? Well, let me cut a long story short. I don't think it is, but we'll dive into that because you need to know what's going on. We've got the XRP ETF update. We've been waiting for over a year for this ETF to come out. It looked very, very likely it would be in October, and it was going to be in October, but the SEC changed the rule book. What does that mean? When is it going to come out? Well, let's get into that as well. We've also got the US government potentially shutting down. We've got Trump with new tariffs. We've got a full KDP Dr. Pepper analysis, as well as a lot of other news. So let's get straight into it. Thank you everyone for tuning in, whether you're watching live or you're watching later on. Remember, we are live every single morning, 2 hours before the opening bell. Please do tune in with us live as we interact with you every single day. And there's a great sense of community here. Please do hit the like button whether you're watching live or later on, and do subscribe if you haven't done so already. Here are all the top stories, extra bonus stories in today's newsletter. Remember, get the newsletter. It's free. You can have the premium plan as well if you want one-on-one contact, the full articles and everything like that, but even the free version is great. So it's the first link in the description. You get everything every single morning before the bell goes. So a lot going on. So let me just run through the top stories, and then we'll go deeper into those XRP, Ripple, Swift stories. But just so you can understand what's going on, there's a lot. We've got the US facing imminent shutdown as Trump and Democrats clash over ACA credits, Medicaid cuts, and permanent layoffs. So that's all going on. We are seeing the market sell off slightly today. We've got XRP down 1.15%. We've got even gold down today. It was down as much as 1%. It's trying to gain again, but it's still down 0.5%. It was the first day that in the newsletter every single asset was down when we did the market snapshot. Bitcoin was down, Ethereum was down, XRP was down. The S&P 500 was down, NASDAQ was down, the FTSE 100 was down. And then this was even stranger because sometimes the commodities go against this, but the 10-year yield was down, oil was down, and gold was down as well. Every single main thing we look at every morning was down. So that's going on. We'll cover that story a bit more. We've got ExxonMobil cutting 2,000 jobs in global reconstructing, joining wider oil industry layoffs amid falling crude prices. So we've got oil prices coming down, which is great for inflation, but it does also mean they are cutting jobs, which is not great for the labor market, which is of course what the Fed is slightly worried about now, and what can lead to a recession, a hard landing, and that's what no one wants. We've got Trump slams tariffs on lumber and furniture, escalating Canada tensions while worsening US housing affordability crisis. So we've got new tariffs. Again, quite a large tariffs. We'll cover that as well, but that's what's also bringing the markets down. If you look at the S&P 500 this morning, all of this news is bringing it down. It is slightly down. It was down more earlier in the day. It is trying to come back up now, but it's still down on the day. We've got Bank of Japan holding rates, but discerns push for hikes, signaling possible October tightening as inflation pressures mount. We've got Bank of Japan. Remember, there could be a carry trade at any point. Now, we've also got Michael Saylor downplaying strategy, shrinking Bitcoin premium, but investor confidence wanes amidst ETF competition. So we know about MicroStrategy. It used to be the best thing in the world because there wasn't a Bitcoin ETF. Now there is a Bitcoin ETF, and people don't want to take on the risk, or they don't want to be holding a company when they can just basically be holding Bitcoin. Their premium is shrinking, but Michael Saylor is playing it off. We've also got the SEC scrapping 19B4 for crypto ETFs via generic listing standards. S1 clearance could accelerate launches this October. So it could accelerate things. We're going to come onto that story just right after this. We've got the Swift unveiling blockchain shared ledger with Conseus, 30 banks aiming instant cross-border settlement while validating Ripple approach lead. So I'm going to come onto that story as well. I've given you a hint of what I think it's all about. And then obviously we've got the KDP deep dive today. We did Coca-Cola yesterday. We're doing KDP today. So a lot to get into. Let's go into the main stories, which I think we want to cover. Let's start with the government shutdown, and then we'll go into the XRP story and the Ripple story. If you have just tuned in, please do make sure you hit the like button. Please make sure you have subscribed as well. It's great to be back. First day was yesterday after a honeymoon, so I'm very happy to be back to be sharing this news. And there is a lot of news this week, so let's get into it. Here is Brad Garlinghouse with Senator XRP is not a security. That is on martynlucasshop.com. You can go and grab it. Remember, we had to pay money to bring that XRP logo to you. So, okay. Let me just have a quick look. XRP really taking a sentiment hit. Hype is dying down. I don't think so. I'm out for now. Beans on toast. I respect your decision, but I'm not out. Morning, Sensei. I hope you're well. What do you know about the UK crypto ENTs coming October the 8th? I'll do a whole video on that, Daniel. We've got some time to get prepared for that. So let me start with the government shutdown news. Then we'll come on to the SWIFT news, then the XRP news. And I'll even share, someone just, Beans on Toast mentioned that the hype is dying down, but the whales aren't dying down. I'll find a chart and show you that as well. So, government shutdown looms. Trump Democrats at impasse over health care. So, the government is on track for a shutdown beginning 12 a.m. Eastern Time, Wednesday, October the 1st. If Congress fails to pass a stopgap funding measure. After a Monday meeting with President Trump ended without agreement, Republicans who hold a 53 to 47 Senate majority must secure at least 7 Democrat votes to overcome the 60-vote threshold and advance a continuing resolution that would fund operations through November the 21st. Democrats are demanding a permanent extension of the Enhanced Affordable Care Act premium tax credits set to expire at the end of 2025, along with a reversal of the $860 billion to $1 trillion in Medicaid cuts embedded in Trump's recently enacted One Big Beautiful Bill. Senator J.D. Vance stated, "We're headed to a shutdown because Democrats won't do the right thing," while Democrat leaders maintain that Republicans will be blamed for any lapse in funding. The Trump administration has heightened pressure by ordering agencies to submit a reduction in force RIF contingency plans typically used for permanent staffing cuts as part of the shutdown preparations. However, federal law prohibits agencies from executing layoffs during a shutdown, with the RIF directives appear aimed at strengthening the administration's negotiating position. Even so, agencies are preparing significant furloughs, including 41% of the Department of Health and Human Services workforce, over 32,000 employees. A lapse in funding would also pause the release of critical economic indicators such as Friday's jobs report, potentially complicating policy decisions ahead of October 28th to 29th FOMC meeting. Remember, we cover all the FOMC meetings live. This would be quite a big deal, especially if this lapse in funding would mean we won't get the jobs report on Friday. That would be quite significant. And of course, that could definitely complicate the FOMC meeting, where markets currently expect a 25 basis point rate cut. Remember, we are looking at the Fed Watch Tool at the moment. If you look at it, we are expecting, the market is about 90% confident that we will get a rate cut here in October. And also, the market is pretty confident that we'll get a rate cut in December as well. Over 60% confident that we'll get 2 rate cuts this year. So, while historic data shows limited direct impact, shutdowns have coincided with positive S&P 500 returns in 12 months of the past 21 instances. This episode carries elevated uncertainty due to its potential depth and timing amid fragile economic conditions. So, we have had shutdowns before. I think the last one was in Trump's previous term. and we don't know if it's going to cause a crash or not. The facts are that normally the 12 months after this, you are in an uptrend, but I don't think we can just take that as we go. This time around, there is a lot of economic uncertainty, especially if we don't get the jobs data and the FOMC meeting gets delayed or something like that. That will cause a lot of uncertainty, but it's a story worth noting, and that's why the markets are slightly down today. They could be down more tomorrow if this does go ahead. Again, I'm no expert on US politics. I don't know exactly what a government shutdown means. I don't know all the economics behind it and what it actually means. But what I do know is uncertainty isn't great for the markets, and especially when it has something to do with the jobs data and the FOMC meetings, when the economy is sort of on the brink of whether we're going to have a hard landing, a soft landing, inflation's going to continue, we're going to lose a lot of jobs, and we're going to have a hard landing. When all of that's going on, added uncertainty is certainly not a good thing. So markets are conditioned to dismiss shutdown noise, but permanent layoffs and blackout periods for key Fed data are rare and potentially destabilizing. Track the shutdown length closely. Short disruptive is noise, but prolonged gridlock could break the pattern. Let's see what happens tomorrow. Let's see how long this continues for. But it's something we should definitely keep an eye on, and that's why it's one of the stories in today's newsletter. But something we know a lot more about, which I want to come on to next, is this XRP story. So let me come over to the crypto ETF shakeup faster than expected. So let me there we've got Gary Gensler, even though he's not the it's always better to have Gary Gensler as the image than Paul Atkins. We all know him a bit more. So let me just come on to this next story. I'm reading a few of your comments while we're coming on to the XRP or the crypto ETF news from the SEC. Morning, Sense of Hope as well. Yep, I've answered that. Hello, everybody. Chris says, do you think that ISO coins will ultimately uncomplete from Bitcoin? And if so, what? Uncompleted? I don't know what you mean by that. Matthew said, if the shutdown drags on, halting jobs data and forcing major furloughs, does the real risk shift from politics to the Fed? Yeah, that's the issue. If it sort of drags from what's happening politically to actually data that is very, very important where we are right now in the markets, that's when it becomes an issue. But let's come on to this ETF story, and I wonder if we can make this into a video as well. Let's turn this into a video as well. So what I'm going to do is go over here. Recording. Here we go. We'll do this as a video as well. There we go. Okay, here we go. We're going to come on to the next two stories. I just want to make it into a video as well so we can put it out as well. Breaking news on Martyn Lucas Investor. We've got two big stories today. We've got one on the XRP ETFs or ETFs as a whole in the crypto world now potentially being delayed further or being accelerated. Well, the rules have changed. We were so close to the 245-day deadline in October where we were very confident we'll get all these XRP ETFs approved, but the SEC have changed the rules and the XRP ETFs are being withdrawn. So I'm going to explain that to you in a second. We've also got Swift coming out with a new blockchain proposal, bringing on 30 banks and directly trying to compete with Ripple. Or that's what people are saying on X, and everyone's saying this is the end of XRP and Ripple. But I'm going to bring you the facts, so let's go straight into it. If you have just tuned in, please make sure you hit the like button, subscribe if you haven't done so already. Let's start with the crypto ETF news. So, okay. Crypto ETF shakeup faster than expected. So the SEC has told issuers of crypto ETFs, including Solana, XRP, Litecoin, Cardano, and Dogecoin, to withdraw their 19B4 filings. On the surface, That sounds awful. It sounds terrible. It sounds bad. In theory, it's not actually that bad. It is, to me, it's a bit frustrating because we've waited 245 days plus for all these ETF filings to get past every single hurdle, every single extension, and we're coming up to a point in October, literally a couple of weeks from now, we would have had these ETFs coming onto the market. And it seems like what the SEC is asking these providers to do is withdraw these applications. Remember that 245-day deadline means that SEC had to either approve or deny. They couldn't extend it anymore. And in the experts' opinions, including my opinion, we were very, very confident they were going to approve it because there's no reason for them to deny it. But now they've done one thing. They couldn't delay it, but they can change the rules. And they did change the rules. I think it's a good thing overall, but I don't think you can ever trust the SEC, in my opinion. Anyway, here we go. So the SEC has told issuers of upcoming crypto ETFs, including, remember, it's not just an XRP ETF here. We'll plan, this was going to be, in my opinion, the beginning of that altcoin season, where other altcoins were going to get approved as well, including Solana, XRP, Litecoin, Cardano, and Dogecoin. They were going to withdraw their 19B4 filings. The SEC have basically asked them to withdraw their 19B4 filings. That's those ETF filings. Normally, those filings triggered the long 245-day review clock, which is why October is seen as the decision month. But with the SEC's new generic listing standards approved, those rule-changing filings are no longer needed. Instead, exchanges can list crypto ETFs under generic framework, just like gold or silver funds, removing the biggest procedural delay. So they've moved to a much better system, much quicker system, and one that's not just for crypto or one that doesn't have all these delays, to remove a massive procedural delay. But the issue is all these crypto ETFs have gone through these procedural delays and we're on the last stretch. So it's a bit ironic. You remove the procedural delays after we've gone through the procedural delays. So that means that the old October deadline doesn't matter anymore. And the race to market is actually sped up. That's what CoinDesk is reporting. CoinDesk is reporting that this should actually mean that ETFs could be approved tomorrow, next week, very quickly now. So what I think these issuers need to do is remove their filings and then apply again. And then once they've applied, it should be a very quick turnaround. So it could be quicker. It could be next week we get XRP ETF. It could be not the 18th of October, which was the first ETF for XRP. It could be the 3rd of October. It could be the 7th of October. But there isn't actually a date. There isn't actually once you apply, there's 45 days or 200 days or 10 days. It isn't like the other listing. So it's a little bit complicated. It's just as long as all your paperwork is correct, then you essentially you can be listed. So from here, the only step left for the SEC's corporate financial division to clear each fund's S1 registration statement, which covers disclosures and structures. So essentially, if they've got this S1 registration statement, everything is in the clear, then it should just be approved. Analysts like Bloomberg's Eric says that this makes approvals virtually guaranteed, with odds now at 100%. Timing is the wild card, so there's no fixed 45-day or 245-day deadline anymore. But since S1s like Solana's have already been amended several times, launches could come in weeks or even days. In short, ETFs aren't really being delayed. They're now on a much faster, more predictable path to markets. I'm going to explain this a bit further as well. So it's very weird, complicated, strange from the SEC to do this at this point. But it's not necessarily a delay. It's not necessarily, it doesn't, in theory, if we're taking it at face value, this is an amazing thing and ETF should be rolling out faster than expected. And we can have a lot more crypto ETFs much quicker. So let's put this in perspective. Eleanor Terrett, a journalist from Fox Business who closely tracks SEC policy and crypto regulation, highlighted the withdrawal request and their implications. So Eleanor Terrett was actually who broke the news, a very trusted journalist, so I am taking a word on this. Meanwhile, Eric Blackchunas, a senior ETF analyst at Bloomberg Intelligence, we've been tracking him as well, added that the new framework makes approvals virtually certain, with timing potentially moving absurdly fast. So let's have a look at all of these tweets that have just come out over the last day. Which is all about this topic, because remember, this is just breaking. We're just trying to get our head around this now. If you have just tuned in, please do hit the like button. Remember, we've got that Ripple and Swift story coming up as well. So, Eleanor Terrett started this all off with this tweet here. She said the SEC has asked issuers of Litecoin, XRP, Solana, ADA, and Doge ETFs to withdraw their 19B4 filings following approval of the generic listing standards, which replace the need for those filings. So these filings, these 19B4 filings, the ones that have been in force for the last at least 200 days or 220 days. Remember, the final deadline was 245 days. That would have been on the 18th of October for the first XRP ETF. The SEC has asked these issuers, take them away. All those hurdles you jumped through, all those all the nearly 1 year of waiting, remove the filing. We're starting again with a new way of listing. So they've asked to withdraw the 19.4B filings following the approval of the generic listing standards, which replace. So now this generic listing standards are replacing the needs for those filings. She's also told that those withdrawals could start happening as soon as this week. So what we have to see first is who's going to withdraw first. Probably today, tomorrow, we're going to see some XRP providers, issuers of those ETFs start withdrawing those ETF applications and then reapplying with just the generic listing standards, and then potentially having ETFs as early as next week be approved. So the issue is that the reason I'm a bit skeptical, the reason I'm a bit annoyed about it all is because why do it now? We were 18 days away from the first XRP ETF from being approved. I don't care if we get it a week earlier. I just wanted to be certain we get it in 18 days. There is no certainty with this. In theory, it should be very, very quick because they've got these general listing standards, but there is no deadline. There's not like, since from the point they apply 1 week. There is nothing. It could be 5 years in theory. I don't think it'll be 5 years. I will take their word for it. I think this will be quicker. I do agree with Eric, and this should happen very, very quickly, and this does improve the odds. But what's frustrating to me is we waited 245 days, and we were so close to that final target, and then the new rules come in place. So let's continue a little bit more. The scoop from Eleanor. This is Eric replying to Eleanor. Remember, Eleanor Terrett is that journalist. Eric is that ETF expert from Bloomberg. He says, "Nice scoop from Eleanor here. There was something. Was something we thought could happen. It makes sense that you don't need the 19B4S in the post GLS world. Just not sure how the launch schedule will work yet. More will be revealed soon." So even a senior ETF analyst expert from Bloomberg, full-time job is to understand these ETFs. He doesn't even know how the launch schedule will work. He's also said here, replying to someone else who said, this was something you thought could happen, then why did you increase your odds from 90 to 95% on ETF approvals? He now says actually that the odds are really 100% now. Generic listing standards, which is what we're moving to, makes the 19B4S and their clock meaningless. This just leaves the S1s waiting for formal green light from Corp Finance. And they've just submitted amendment number 4 for Solana. The baby could come any day, be ready. So he is very confident. And so someone was challenging him, saying, you increase your odds to 95%. Now this could mean they're much lower. Instead, Eric has said, no, the odds are not lower. Now I'm putting the odds at 100% because this new standard means there is no clock and it's just one formal green light and they can be listed within days. And it looks like Solana could be first. So in theory, this change could accelerate approvals, but given this is my thoughts, but given we're already near the old October deadline, I'm slightly cautious. bottom line, I still expect ETFs this year and likely in October. So I am going to be optimistic. I am going to try and trust the SEC, even though we haven't trusted them for the last 5 years or forever. I'm going to try and trust them and think that this new filing system, not only is it going to be better, but it means that these ETFs will still come out in October, and if not, in October, even earlier, early October compared to when we were expecting it, because it does seem like this process is quicker, faster, and the experts such as Eric are saying that we could have any day now with Solana ETF, so an XRP ETF could be days after that. So everyone's saying that this is delayed. On X saying that we're not going to get these ETFs, that the odds are now 50%. I completely disagree with them. I think we're still going to get them. It is just slightly frustrating that we were so close, and now we've got something new to get our heads around. But in theory, it could mean, and most probably we get an XRP ETF potentially next week. So my thoughts are, I think if I put my frustration aside, that we knew exactly what path we were on and that we had the certainty, I still think this is better, and I still think I still think we're 100% likely to get these ETFs this year. I think we're very, very likely to get them in October. And it's quite likely we get them next week. So get ready. These ETFs could happen next week, and altcoin season can start as soon as October starts. As well. The only other thing that everyone's talking about and creating a lot of FUD about is Swift entering the blockchain payments race, and everyone's saying XRP is going to die, Ripple's going to die. Well, I don't think so. Swift has entered the blockchain world finally, a little bit late, but they have. And let me explain to you what's going on. So Swift has announced plans to launch a blockchain-based shared ledger in partnership with Conseus and 30 global banks, aiming to deliver 24/7 near-instant cross-border payments with smart contract functionality and links to tokenized assets. Sounds like Ripple, doesn't it? So rather than replacing its existing rails, Swift will layer this new system on top of its trusted global network, allowing banks to choose between traditional messaging or blockchain settlement. The move is positioned as a direct response to growing competition from stablecoins and blockchain-native players, signaling Swift's recognition that its decades-old infrastructure needs a major upgrade to stay relevant in the evolving world of digital finance. So, on surface level, you might look at this story and think, wow, Ripple was supposed to take over Swift. Ripple was supposed to work with Swift. Swift was supposed to go bankrupt because they're not keeping up with blockchain and 24/7 payments. That was never going to happen. Swift is a payment giant, and they needed to innovate. However, they are still very, very far behind. So, and what does this mean for Ripple? Well, I'll tell you now. So, for Ripple, the headline might sound threatening, but in reality, it's more nuanced. Ripple and the XRP ledger already have years of real-world adoption, liquidity corridors, and regulatory testing under their belt, while Swift is only beginning to experiment with Ethereum-based technology through Conseus. So remember that. Ripple has literally been doing this for over 10 years. They have been part of the XRP ledger for over 10 years. They have years of actual real-world adoption, real-world examples, real-world understanding. They already have liquidity corridors, and they have got all the regulatory testing under their belt. Swift is only just starting this journey today or yesterday with Ethereum-based technologies in 2025. They are so far behind. They'll catch up. They've got money. They can fund these things, but they are so far behind, and they don't have the real world testing. So banks are conservative and may take years to fully integrate Swift's blockchain layer, leaving Ripple room to grow its foothold. More importantly, Swift's announcement shows that Ripple's model was right all along, and this is the most important part. This has literally just confirmed the fact that Ripple has been right this whole time. This has just made investors of Ripple, the company, XRP, the token, more confident in their investors. When a payment giant, the biggest payment giant, Swift, is also following suit with something Ripple's been doing for 10 years, and Ripple's been doing it for 10 years, people are going to look at this and go, wow, someone's already been doing this 10 years. The biggest payment giant is also moving to blockchain and crypto. Who am I going to want to be invested in? Someone who's been doing it 10 years or someone who started yesterday? And what does it do? It also solidifies that Ripple was right all along. 10 years ago, Swift would have thought Ripple's stupid and that they're never going to be able to take any market share from Swift. But the fact that Swift is starting to experiment, starting to partner, starting to understand crypto and blockchain, it means it puts Ripple in a much better position, and it confirms to all investors of Ripple and XRP that they have been investing in the right thing. Remember, nothing I say is financial advice. This is my thoughts and opinions only, so please do not buy or sell based on anything I say. So Swift's announcement shows that Ripple's model was right all along, and that's massive. That gives confidence to investors. Cross-border payments need blockchain speed and settlement, but Swift is playing catch-up. The bottom line is Swift's move validates the space, but it doesn't erase Ripple's lead, especially in markets and use cases where XRP's efficiency and proven corridors already outpace traditional rails. So Swift is finally admitting Ripple was right. Blockchain is the future of payments, but arriving late to a race where Ripple has already had the head start. So those are the two big bits of information I want to bring to you. The ETF news, the Swift news, both are fairly bullish bits of news at the end of the day. If you look at XRP's price, it is down today with the rest of the market. But this could be us going into October. If we bring up the 3-day time frame on the chart, this could be the last time we might see XRP in the $2 levels. In October, we could, and I think my prediction is, again, it's not financial advice, I don't have a crystal ball, the most likely situation, in my opinion, is XRP gets back above $3, get back towards all-time highs, and we start seeing potentially $4, $5, $6, $7, $8 before the end of the year. My main target is $4.20 to $4.70. I will be taking profits there, and I think we will certainly get at least to $5 by the end of the year, and the bull market could continue into Q1 of 2026, but I think we will enter a bear market in 2026. So that is my thoughts on this. So please do check out, there'll be 2 videos over here. Please do check them out. Please do hit the like button, subscribe, leave a comment down below. But until next time, take care of yourselves and each other. Okay, so that was just a video I want to put out. Let me go back to the charts. If you guys have any thoughts on those 2 stories, let me know. Are you bullish, bearish? Do you think Swift coming in is a problem? Do you think this XRP ETF news or this new filing system for the ETF is a problem or not? Let me know in the comment section below. So let me go back to the charts and your thoughts and opinions on all of this. What else do we have? Okay, perfect. Then we do have some other news stories as well in the newsletter today. If you haven't got the newsletter yet, let me please give you the link for it. Where is it? It's over here. I'm going to give you the link for it. This does give you a 1-week free trial as well. So if you haven't got the newsletter yet, do consider subscribing to the newsletter. Let me give you the link. There is a 1-week free trial with this link as well. Let me put it in there, put it in here. So essentially, once you click that, you've got an option. You can go for the free plan. If you want to have a 1-week free trial, then you go for the yearly plan, and then try out the newsletter, because every single day you get all the information straight to your inbox. You get everything at a glance. If you don't have much time to read it or you want to read it later, but you just want to get the key facts of the day, you get it all there. You've got the one big thing, what's going on in the markets. You get the price of our favorite assets or the most important assets, the 5 things you need to know every day. Today, we had 2 extra bonus stories, which were those XRP and Swift stories. We've got the deep dive today, which is on a stock analysis. So sometimes we do stock analysis, sometimes we do macro events. Today is on KDP for Seth Houston. We've got, and for everyone, really, it's an interesting company. We did Coca-Cola yesterday. Now we're doing Dr. Pepper, KDP. So we've got all that information there. Martyn will be covering this later as well. We've got the economic calendar, what's going on today. We've got some housing pricing index. We've got the Chicago PMI, consumer confidence. Friday, I think we are expecting some jobs data. But the issue is we might not get it because of the government shutdown. We've also got the chart of the day, so you get my thoughts on it as well. That's on KDP today. Let's go through the markets quickly, see what's going on. It's just a little bit of a strange day. We woke up and the markets were down quite a bit, and now they're trying to be brought back up. Gold has been on an amazing run, and we are very, very, very bullish on gold. Or we've been very bullish on gold. I mean, how much higher can it go? My final target is $4,300. We've been we did a full gold report back in October of 2022 on this channel, where we said gold is going to go on a massive run. We looked at this massive cup and handle on gold, and it's played out perfectly. I think we've even hit the target of the cup and handle already. I'm sure we have. Yeah, we've already hit the target of the cup and handle, and we've gone way beyond it. Our final target being $4,250, but an absolutely amazing trade on the world's least volatile asset. In the last 2, since we've called it, we're up about 140% on gold. We are also super bullish on silver. Silver's down 1% today, but that's been going on a massive run. Remember, we've been bullish on silver since about $15, $17, $18 an ounce. Was it that? Yeah. Yeah, about $17, $18 an ounce is when we did the report. Now we're at $46 an ounce. Remember, just a few weeks ago, we said this breakout from $37 is going to be massive. And as soon as we break $50, we are looking at a massive push up to $75, $80 and potentially $100 in the next by the end of 2026 on silver as well. So silver is on a massive run at the moment as well. If you look at Bitcoin dominance, remember it's always worth looking at Bitcoin dominance. When Bitcoin dominance goes up, it's normally Bitcoin season, or the markets are coming down, and people are fleeing to Bitcoin because it's the safest crypto asset. We did expect that this downtrend at some point will break, and it did. Bitcoin dominance has been going up for the last couple weeks, suggesting that altcoins haven't really been pumping, and that is true. I do think we were very oversold on Bitcoin dominance, so I do think Bitcoin dominance will continue heading up for another maybe a week or so until the altcoin season starts. Then we can see the further collapse of Bitcoin dominance back down towards levels we haven't seen since the bear market. And then we can start identifying when the bear market will start. But I still believe we will have an altcoin season, and Bitcoin dominance will be a chart that we'll keep an eye on throughout this. We've got NASDAQ and the S&P 500 still suggesting that they're going to continue to put in all-time highs. That's why I'm still confident on the crypto markets, because the general markets are also looking very bullish, and crypto will follow suit with what the general markets are doing. Looking at the crypto markets today, everything is slightly down. Flare is down the most, down 4%. Remember, I am very bullish on Flare, especially if we get a proper altcoin run. I think Flare's very, very interesting what they're doing, especially with how they are working with XRP and giving a yield to XRP. I think that's massive. Also, what they're doing with oracles, I think is very cool. Flare is very undervalued, in my opinion, $2 billion. In a proper altcoin season, I can see this doing a 10x, 50x potentially as well. If we do get a proper altcoin season, the evidence is suggesting we will get an altcoin season, but it might not be explosive altcoin season. But I still expect very good returns on Flare. What else do we have in the crypto? We've got XRP. Remember XRP, I've given you my thoughts. I'm not one of those crazy people that will start, and I respect everyone's opinion, but I think it's crazy to start calling for a $50, $100 XRP this cycle. I think I think $10 is a very, very, very bullish target for XRP, and that's why I'm not waiting until $10 to take profits. I will start taking profits at $4.50. I've got all my targets, and I'm not afraid to, and I'm very transparent with where I'm going to be selling. $4.30. $4.70, $5.30, $6.30, $7.40, $8.51, and potentially $11 if we ever get there. Those are the levels I'll be selling my XRP in this cycle. We might not get there. We might blow past it. I think $5 is a very sensible target. Remember, we were buying XRP at 30 cents only a year and a half ago. So to get from 30 cents to $5 in a year and a half is great. We've got Bitcoin. I still think that will push up to new all-time highs. We're going to keep an eye on it, because if it is the start of the bear market, and there's always a chance that we are already in a bear market and we won't realize until 6 months down the line, what we want to make sure we see is higher highs from Bitcoin, potentially breaking these highs around 117,000 and obviously breaking all-time highs. That will confirm that we are not in a bear market. So we are going to keep an eye on Bitcoin and make sure we don't make a new lower low, because that will support the argument that a bear market has started. Ethereum, again, I like Ethereum. I'm not super bullish on Ethereum. Maybe 8 to 12,000 is the main targets of this cycle. But we are holding support around $4,000, which is good to see on Ethereum. What else do we have here? HBAR will obviously do well if XRP does well. I'm bullish on HBAR. It's not my biggest holding, but I am bullish on it. Ondo, I'm bullish on. Again, not my biggest holding, but I can see this going to $5 this cycle. We've got Filecoin. Again, a very high risk token, but I see this even going to $7 will be massive. The all-time high on this was about $250. So in a proper altcoin season, people will buy this expecting it to go to $250, but we will sell much lower than $250 because it will never get there. And we'll make money while everyone else is exit liquidity. And unfortunately, that is the truth. When we go through these altcoin seasons, new people enter the space, they end up being the exit liquidity for the people that know what they're doing. ADA, I also like ADA, and it's currently sat at 79 cents. I think this can go to at least $5, $5 this cycle. So I am also holding ADA. Just seeing if anything else jumps out at me there. No, it doesn't. If you're looking at the stock market as well, we've got Tilray up 60% yesterday. What an amazing day on Tilray. Remember the risk to reward down here when we covered it at 40 cents. Only a few weeks ago was incredible. And that's what makes me want to do a trading challenge or a stock challenge on the show. So let me know if you want me to do that. That would be great, because we'll be picking up Tilray around 40 cents, and today it's around $1.85. So even with pretty terrible stocks like Tilray, there is 300% in less than 100 days. I think that is amazing. And the risk was very low down here. So congratulations to anyone holding Tilray. Well, not if you've been holding Tilray long term. Unfortunately, it's been a terrible ride for you. But anyone who got involved with Tilray below $1, congratulations to you. Etsy was up 15%. Hood just made all-time highs yesterday, up 12% yesterday. So again, I wouldn't be investing in Hood just because I think it's overvalued. It's about $121 billion. We were looking at Hood in the bear market at $10. I cannot bring myself to buy Hood at $136, even though it'll probably just continuously go up slowly but surely. It is just, I can't bring myself to buy Hood at $136 when we're buying it at $10. And also the price to earnings is now 61 times. It's overbought in my opinion. Is there anything else that we want to, what was down yesterday? DXYZ, Soundhound down a little bit. Pre-market today, what's up? Got Circle up 5% yesterday, 3% today. Let me go to your comments and then we'll go over to Martyn's show. Let me just read some of these comments. Swift is late to the game. Blockchain payments are real, but Ripple already got adoption in tested corridors. Exactly, Matthew, I agree. Now Swift is reinventing the wheel. Exactly, this is bullish news. EVM sidechain and now settled through XRP. Thank you, JJ8Ball. Ray says, yes, Swift is very far behind, but it means Swift is shaking because XRP out. Good luck. Matthew says, exactly. Swift's move just proves XRPL is shaking things up. Ripple's lead speaks for itself. Exactly. They announced very soon. Thank you, Ray. They announced very soon. Sure, they don't have plans on the table yet, just to show their partners they are competitive. Thank you, David Hensley, for being here and sharing all those links. KCN is here. Hi, Sensei, everyone. Hello. Uptober. I hope so. Pumptober says Thorsten. Thurston Jubal Winter. Yes, I hope so. Someone said ETFs will be dead in the coming future. I don't know what you mean by that, Terry. ETFs can't die. Matthew says, could be, but right now ETFs are just getting started with crypto ETFs speeding up the game far over from now. Yes. Yeah, a lot of people say silly things. Yes, I don't think ETFs are dying. Angie says, hello, Sensei. I received my avatar mug, but unfortunately I still didn't get my auction mug from the Uganda parties. Thank you for looking into it. I appreciate it. Yes, of course, Angie. As I said, I've just come back and I'll be sending those out shortly. But thank you for your patience and thank you for supporting our charity partner in Uganda. I'm glad you got your Paris mug as well. That's I think they're all sold out now. Maybe you got the last one. Sean says, what is your 2026 bear market based on, please? Thanks. The 4-year cycle. Jenny says, why would Swift not just work on Ripple since they have the experience? Why would Swift not just work with Ripple? It's just like, I mean, if you think about it, remember when Tesla was massive, was the underdog, everyone thought it was going to go bankrupt. And then everyone started producing electric cars and Tesla became much, much more profitable. And the others don't know how to build electric cars. They were very late. They didn't enlist Tesla's help and they tried to do it themselves because that's just the way that these old companies work. They don't want to, they just want to do it themselves. They could have worked, all these massive companies could have worked with Tesla. They decided to do it by themselves and that they are still way behind. Terry Martyn says institutions will be running nodes. You have to do a deep dive on quant, which has been tested out last week with the Bank of England and other global banks. Swift was testing XRP on the weekend. Thank you, Terry. I can't confirm that information. Okay, so what we're going to do is go over to Martyn's show. So let me just click this. I think Martyn is starting now, so I'll send everyone over to Martyn. Can silver go to 10x by the end of Can silver go 10x by the end of 2025? No, definitely not. Let me skip through these. Do a 10,000 to 100,000 challenge. That would be great. Maybe we should do that. Good morning, Sensei. Welcome back. Thank you, KC. Great to have you here. Yes, it was an amazing honeymoon. Okay, it won't be no shutdown. Well, we will see. Thank you, everyone, for tuning in. Remember, we're live every single morning. Martyn is now live. This stream will take you directly there. If not, click on the pinned comment. It's great to be back. Hope you're enjoying all the updates. Do check out the newsletter. The link is in the comment section below. Here is the link to Martyn's show as well. That is starting any second now as well. So there is Martyn's show. So thank you, everyone, for tuning in. I'll be back tomorrow, same time, 2 hours before the opening bell, 1 hour before Martyn's show. But until next time, take care of yourselves and each other. Bye-bye.